Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Bit of a shortened week in the US this week after Memorial Day holiday. But it looks like the market is sort of grappling with sort of comments from the Fed and also data coming out as well, which really indicate that the Fed probably don't have to cut interest rates immediately. And that's starting to impact on the market now, with the Dow sort of falling another couple of hundred points. Also seeing rates back up a little bit as well. The 10-year is back above 450 now at 454, and that 2-year is just under 5% at 498. Now, while the sort of Fed rate cut seems to have been delayed sort of further now towards the end of the year, it should be taken as sort of encouraging news because the US economy is still pushing on at a pretty good rate. Inflation is coming down, although obviously not as quickly as the Fed would like. But now what could be interesting in the next sort of couple of months, those employment numbers are starting just to creep up just a little bit on the sort of unemployment side. Certainly the labour market has had some of the heat taken out of it. And that should be good for quelling inflation. But all eyes this week will be on the personal consumption expenditure, which is the Fed's preferred inflation gauge, which comes out at the end of the week. And looking for a monthly rise there of sort of 0.2 to 0.3. Now on the political front, ex-President Trump's trial is sort of wrapping up now with closing arguments in the hush money trial. It's just going to be very interesting to see what verdict comes out of that trial. Because that could have some major implications for ex-President Trump. If he's found guilty and has a criminal charge against him, it'll be interesting to see how his polling numbers would hold up. Now, oil's come back, popped up just above $80 now, sort of $80 and change. But again, sort of still not running away with itself. And certainly as you head into sort of July the 4th and the big sort of driving holiday in the US, just going to be very interesting to see what sort of demand comes through. Obviously still got the two conflicts out there, but Israel is coming under increasingly pressure now to sort of get around the negotiating table and firstly have a ceasefire and then sort of get around the table and sort of try and come up with some sort of solution. And that's really on the back of another sort of errant attack where a number of civilians were killed. Now in the UK, it's a really sort of full swing election campaigning now. And again, at present, it looks like Labour will get in quite comfortably. But the UK economy is showing signs of life and sort of coming up with just a little bit of growth out there. Inflation is falling pretty dramatically as well. And certainly if the Bank of England was to cut interest rates, it would be quite interesting to see how that would impact the mix. Now, as we head into June, ECB is widely expected to cut interest rates in June. And again, it'll just be very interesting to see, one, whether they do cut interest rates, and two, what sort of size cut it would be. Because certainly, again, could give a much sort of needed boost to the European economy, especially as we head into those summer months, which traditionally should be pretty good with sort of tourist spend coming through. Now in Australia, sort of steady as she goes, really. The Australian economy is pushing on at an okay rate. Corporate earnings are sort of, okay-ish. Guidance is not too bad. Inflation is coming down. The Australian Reserve Bank has come out and said, in the last meeting that potentially they did look at a rate increase, but didn't want to sort of micromanage too much. But certainly, if we see another set of data with inflation falling out there, then potentially we're starting to look at when will the RBA look at cutting interest rates. Now here in New Zealand, obviously all eyes are going to be on the budget on Thursday, and it's just going to be very interesting to see what comes out, because it looks like it's going to be a pretty tight budget. There's not going to be too much to give away, but obviously national campaign pretty hard on sort of giving tax cuts to the working New Zealanders out there. So it'd just be interesting to see what sort of size those tax cuts actually come through at. Because certainly, the New Zealand economy does need a boost. It's not quite on life support, but it's really sort of lagging quite dramatically. But the Reserve Bank coming out and saying, they're not looking at cutting rates, anytime in the sort of near future. Potentially those rates are here to stay for a little bit longer. And that's all because inflation is sort of stubbornly high. Domestic inflation is probably running around sort of 5%. And despite that being well off the peak of last year, it's still nowhere near the sort of 2% target the Reserve Bank's looking for. But then when you take the bigger picture into consideration, the New Zealand economy really does need a bit of a boost. And certainly a rate cut would certainly give that a little bit of a shot in the arm to the New Zealand economy. Now on the fixed interest side, Infratel have a bond in the marketplace. Minimum rate there will be 6.75. Current indicative rate is probably closest to sort of 6.95 to 7.05. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.